The first thing that the Work Together on page 31 wants us to do is to label all of our T accounts and to label the debit and the credit side. So for all of the accounts that we have in this problem, we'll start with cash. And remember, the abbreviation for debit is DR, and that's always on the left. And the abbreviation for credit is CR, and that's always on the right. So for our accounts, we have cash. We have accounts receivable, and I'm going to abbreviate that AR, and that's for Christine Kelly. We have supplies. We have prepaid insurance. Accounts payable for Miller Supplies. Accounts payable for Wayne Office Supplies. And the last account, Jeff Dixon Capital. All right, so let's fill in all of the debits and credits. Debits always on the left, credits always on the right. All right, now it wants us to label each side of the account normal balance, increase, or decrease. So for cash, cash is an asset. Now go back to your accounting equation. Assets equal liabilities plus owner's equity. Assets are on the left side. So the normal balance, which would be the balance that increases, will be on the left. Cash will always be debited if it's increasing. So increases on the left and it decreases on the right. Accounts receivable. Our customers bought from us on account. That's an asset. It's almost like cash. So to increase it, we would debit it. So the normal balance will be a debit. Debits will increase it. Credits will decrease it. For supplies, supplies are something that we own. They're assets. So the normal balance to increase it will be a debit. Normal balance, debit, increases supplies. If it's a credit, it decreases. Prepaid insurance, an asset, something that we own. The normal balance is a debit. That will increase it. Credit decreases it. Now, accounts payable. If we buy on account from our suppliers, that is an accounts payable, which means that we have increased our liabilities. If you look at the accounting equation, on the right side of the equation are liabilities and owner's equity. So the normal balance for accounts payable will be a credit. If we credit, we increase it. If we debit, we decrease it. Accounts payable for Wayne Office. We bought on account from Wayne Office, which means we have to pay them at some point in the future. So our accounts payable increases. Credit, normal balance, increases accounts payable. A debit to accounts payable decreases it. And then the last one, owner's equity, which is capital. It's a capital account. Again, look at your accounting equation. Capital is on the right side. So that's a credit. On the right side is a credit. To increase our capital, normal balance increases by credit. If you have to decrease capital, then you would debit it. The debit side decreases this account. Okay, that's basically it. Think about the accounting equation, assets on the left, liabilities and equity on the right. Normal balance is the side that increases.